This is Jason Barreck of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I'm excited to have him back on. We had him on, I think, in June. He's editor of the Hat Trick Letter, found at goldenjackass.com. Jim Willie, thank you for joining us again.
Oh, it's a pleasure to be on, Jason.
Now, Jim, we have just so much going on in the current events, geopolitical stuff, stuff with OPEC, stuff with the oil price and the Russian ruble. What's your opinion on what's going on in the oil market and with OPEC and Russia?
Well, that's a huge question. There's a prevailing belief, maybe it's a wide assumption, that since the oil price is falling, it must be under control by the U.S. government and the Wall Street masters to harm Russia, which is now the largest oil producer in the world, if not the largest, then among those that don't lie, like the Saudis. I disagree with the belief that the U.S. is controlling the oil price down. I think instead the U.S. and Wall Street and London are trying to bring down the ruble currency so that they can bring about much more price inflation in the Russian economy. I don't think the oil price is under their control. Instead, I have more kind of a dynamic perspective of what's going on. The entire global economy is fracturing. The entire global financial structures are broken. All the markets are being rigged. All kinds of businesses across the world are being wrecked. The cost structure is going up because of the U.S. Fed quantitative easing that ran for almost 4 full years. So it destroyed a lot of capital by raising the cost structure without a concurrent increase in product prices and, how should I say, business investment and wages. So what happened is we're seeing a late stage of a hunkering down into the dollar globally, whether it's a Pakistan business, a French business, Indonesian business, Japanese business, whatever, South American business. They're hunkering into the dollar because it seems to be, the key word is seems, to be safe haven. So as the dollar goes up, all the different Forex instruments come into play, and it knocks down the oil price because the dollar's going up. So it's not so much that they are bringing down the oil price, it's the world is taking up the dollar. And that, through all the different financial engineering devices, is pulling down the crude oil price. I don't buy the argument that the U.S. is doing it, even with the photo op between Kerry and King Abdullah in Saudi Arabia. So what? They met. That doesn't mean they're making a tremendously important deal to harm Russia for all their transgressions in Crimea to save their naval port after the U.S., European Union, and Israel commandeered and brought about the Kiev coup d'etat. Yeah, that's a big violation for Russia to go in there and make sure their warm water port on the Black Sea is all safe. And then they ran a referendum. Yeah, 97% said yes, we'd like to go under Russian rule in Crimea. I wasn't in the U.S. news. So I get sick and tired and I puke every time I see the U.S. news on all this. And now we're starting to hear what doesn't really matter why there are Russian sanctions. There are Russian sanctions. That's our reality. Kind of like the 9/11. So I think the Chinese are the great beneficiary of this lower oil price. Notice that right after the sanctions, Russia was looking for more capital investment, more cash flow into their entire system, not just their economy, but their financial structures. And they brought about a holy grail deal, a 30-year deal for, I don't know, the numbers are really mind-boggling. Is it 200 billion or was it 400 billion? Well, it depends on how many different pipelines. There's a new Altai pipeline connecting western China with Siberia, and that's got its separate deal. And all these deals, by the way, with Russia and China, they're non-dollar. So, okay, China got themselves a better final price on a very large 2-decade, 3-decade oil deal, energy deal with Russia that Russia was reluctant to commit on in previous years. So it took the Russian sanctions. I mean, I almost get the opinion that China is telling the United States, go ahead with your Russian sanctions. We're going to love it.
Yeah, well, what I've seen, Jim, from the oil market in the past, in 2009, you know, when the oil price, 2007, the oil price went up to 140 something dollars a barrel, and then it crashed to 35. China was in there in 2009 buying long-term oil contracts way over spot price from both Russia and from Brazil. So it looks to me like the Chinese are very, you know, long-term thinkers, astute thinkers. They're going to do these oil deals. But you brought up a great point there about the dollar, and it kind of looks like, I've studied the history from 1929 or before, a couple years before, there was a lot of capital that came into the U.S. too. There's just a lot of flight capital here where, you know, the U.S. was a lot better off financially back then. It was a creditor nation. We were actually producing more goods and stuff than the stuff that we're doing now, instead of just exporting as many dollars. But it seems to me, you know, the belief even from then to now is that the dollar is still a safe haven, and that there's, you know, a lot of money that's leaving foreign stock markets, whether it's Japan or whether it's Europe or China, and it's coming here. I mean, even I live right outside of the Washington, D.C. area, and there's a lot of foreigners that are bringing in, you know, their euros, or they're from China, and they're bringing in cash, and they're buying real estate in all cash deals, and, you know, they don't care if they pay that much over the spot market price. They just want their assets out of whatever country because they view it as worse than the U.S.
Well, they're seeing the dollar with its U.S. Treasury vehicle as toxic. What makes the U.S. an apparent safe haven is this enormous backstop called QE, the unsterilized bond monetization. I try to make a point of mentioning the word unsterilized because it really is very important. People need to understand the Fed, the central bank, is printing dollars and not removing it from the bank system, just printing extra dollars. This is pure, corrosive, cancerous, hypermonetary inflation. But there's another big factor that I think brings to bear on the argument that the U.S. doesn't want a lower oil price. The big oil firms have enormous junk bond, in other words, high-yield bond exposure to the shale sector. And that's the marginal U.S. production. It's all at great risk. We're going to see in the next 2, 3, 4 months a parade of failed shale oil junk bonds that default, and the blame is going to be squarely on the low oil price. Big oil, by the way, does not like this lowered oil price. They're having to cut their capital budgets. They're having to slash exploration. They're having to slash their capital investments all over the place. They're going to have to offer, you know, a cut in dividends or something. Something has to give here. So I agree. This Russian vulnerability, I think, is greatly exaggerated. I think the lower oil price contributes to the entire deflation scenario of wreckage. From, you know, we don't have the housing market up anymore. We can't pull equity out. We don't have a good, strong labor market anymore. You can't save much on part-time jobs. It's rendering enormous damage to some of the big power centers in the United States, namely big oil, ExxonMobil, which I believe is going to do their very best to smash the Russian sanctions because they're losing out on the Arctic oil deals.
Those are great points, and, you know, something else about the shale oil industry that I could add to your argument there is that not only is the U.S. shale oil production all the marginal production in the U.S., if you go back and look since 2006, the U.S. shale oil production accounts for about 85% of all the global oil production growth since 2006. So the rest of the world is not finding that cheap and easy to produce oil anymore. The country, the areas that have been doing all the lifting have been the Bakken and the Eagle Ford and some of the new plays that are coming online, and this is not cheap oil. So we've been essentially running flat now, oil production-wise, for many, many years. We're barely growing the needle in terms of global oil production, and all that oil production that has been the growth from what I just said from 2006 to now has been shale. So, and if the then shell companies, Jim, I don't know if you've looked at their balance sheets and financial statements, but even when the oil price, I think, was around $100 a barrel on the WTI, they weren't making that much money. They weren't generating free cash flow and paying enormous dividends and things like that. They were paying a lot of capital out of their budgets just to keep drilling and producing more oil.
Right. If you were to look at the entire set of financial platforms out there globally, 8 to 12 months ago, you could make a list of the basic broken parts like the banking system and sovereign bonds and various things. Well, now you could add two, the gold market and the oil market. So I'll make the broad statement, and I don't even think, Jason, it's all that bold to say. I believe every single major platform has been broken and shattered. We're seeing an end game here. This is, I think, the closing months of the dollar. It's dying. I made a forecast. This is about 2 or 3 years ago. At the time, a lot of clients thought, well, that's a really flip thing to say. Flippant, bold, silly. I said, you're going to know that we're in the very end of this game when the dollar starts rising and then rising some more and defying logic and lying even more, rising even more right before it dies. So the symptom of its imminent death, the dollar, is its big rise. It's breaking everything.
Yeah, I agree, Jim. Now, don't most Keynesians, the people who are running the Treasury Department, the academics who are like Paul Krugman and some of these other clowns who are giving, the advice to the politicians and the central bankers who are almost all Keynesians here in the United States and pretty much in every other country, they don't want a strong dollar because there's a lot of developing countries, Russia, Brazil, some of these other countries, they owe debt. Their currency, you look at India, their currency has dropped a lot against the dollar, but they have their debt in dollars, right? So they don't want a strong dollar because it means that their debts become even more onerous when their currency is falling a lot against the dollar.
It's one more platform that's broken and shattered. Not just broken and shattered. These are not things you can put back together. Can you even remotely conceive of an event where they put together the gold market through COMEX and LBMA? No, these are shattered, completely wasted. This is Humpty Dumpty falling. You can't put the shell back together. This is complete wreckage. And the other thing that's dying regarding the dollar is the petrodollar. This thing is, it's not even in the intensive care ward anymore. It's on the way in the hearse to the funeral parlor.
Yeah, I think we're definitely seeing evidence of that with these deals, like you mentioned earlier about China and Russia, and we're seeing other deals. I think China just did a deal with Canada. So that looks like a currency swap type of deal where maybe Canada has higher Canadian oil sands production. The Chinese oil companies may make some investments there to help support their Canadian oil sands industry, get through these low oil price environment. And, that's going to hurt the petrodollar too, right? Because they're going to start transacting for oil, even more transactions outside the dollar.
It's getting to the point now where outside of Western Europe and the United States, North America, no one's trading oil in the dollar. The United States has very little trade now with Saudis and the Persian Gulf nations. It used to be like 30-40%, but now I think it's in the teens. So most of the Saudi oil is going to Korea, Japan, and China. I think they've got over 50%. There's still quite a lot going to Europe, but the big developing nations of the big mature industrialized nations of Korea and Japan, they use Iranian oil. They use Saudi oil. So the United States is really not in the game here. As far as these bilateral deals, my gosh, you have the RMB Center that was just announced last week in Los Angeles. I didn't think they were going to have a yuan trading center, an RMB. I don't know if this is a full-fledged hub that's going to be in Los Angeles. That means they're going to trade on the Forex, convert the yuan to other currencies, and they're going to sell yuan-based bonds. That's what defines an RMB hub. But there's going to be at least an RMB center in Los Angeles that defied my expectation. There are two in Canada. Toronto and Vancouver. But there's another bilateral agreement that was made that excludes the dollar, and that's between Russia and Turkey. I think Turkey is going to be a very important nation. I've been pointing to Turkey, Saudis, Germany, and Japan as being the key nations to watch. They're all going to flip east. All four are going to flip east. And that's when you're going to see giant momentum on the Eurasian trade zone and, the advancement of the BRICS and their alliance nations. I'm now hearing strong indications that the BRICS are going to bring in the MINT nations, M-I-N-T. That's Mexico, Indonesia, Nigeria, and Turkey. Turkey is fed up with the European Union. They're fed up with the U.S. They don't like how the Langley boys are running their ISIS operation, which is pure Langley operation, folks. They're running it out of the U.S. Embassy in Ankara, Turkey. Turkey doesn't like this. No, we got Turkey that's going to flip. They're already having huge energy deals with Russia that are not related to gas pipelines. They're related to nuclear power centers, power plants, construction. They're related to the Russians building gigantic natural gas storage facilities, pressurized, for Turkey. Turkey is going to be a very important intermediary, and I'm looking forward to the day we get the first nation break out of the NATO or EU. And I think it could very well be Turkey, and it might have nothing to do with the petrodollar, but the Saudis, Jason, they're a bit of a mystery right now to many people. I don't regard them as being too much of a mystery, but they're always a little mysterious because they've got their royals, they've got their problems, they got their reform issues, they got their appropriation thefts of big businesses in Saudi Arabia by the royal families, forcing them to sell at 10 and 30 cents on the dollar of real value, with the consequence of being killed, jailed, or thrown in, or going through endless prosecution for tax evasion by the royals, who can do anything they want. But I'm hearing some very unusual stories about how the Saudis are going to have a very bad time holding on to power. I mean the current Saudis, Abdullah and his family line. And it's going to be a lot of factors that rip it apart. It's rival tribal families that have been out of the power center for 50 years. Well, they're tired of it. They want to share the power. And then you've also got the Islamic reforms. They want more liberal laws. I mean, it's not just that women want to go wearing bikinis at the beach. It's a whole lot more than that. Women in education, women in schools. I mean, it's just a lot of different things. But there's more to it. It's going to be internal, and I don't think they're going to hold it together. They've got a big welfare state. And they're being whacked by the rising food prices. They're being whacked by the rising cost of living. I mean, I just made a point in a recent show about how United Arab Emirates, UAE, has almost no resemblance at all to the Saudis, yet they're neighbors. UAE has no large population, no big welfare state, no enormous fields of poor. No, they probably do have some similar Islamic reform issues and maybe some women reform, but they got gigantic sovereign wealth funds. And I think as the petrodollar goes away, we're going to see a massive flow of sovereign wealth fund money that goes from the Gulf Emirates states. It goes straight into gold. And the Saudis set up something in June, a sovereign wealth fund in Riyadh, independent of their central bank, and it's going to be for diversifying their their wealth. In other words, diversifying away from the treasury bonds. I added up all the Gulf Emirates sovereign wealth funds, Jason, and I came up with $2.2 trillion. I believe 2/3 of that is in treasury bonds. I believe the Gulf Emirates own more treasuries than China, but China gets all the attention.
That is very interesting. I did not know that. But yeah, I mean we're just seeing so many potential geopolitical problems involving oil producers, and then the oil price is low for the shale oil producers, and then all these experts say, oh, the oil price is going to keep going lower, blah 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 blah. But the really astute people realize that the low oil price, a strong dollar, is really bad for the global economy. It could potentially collapse it very quickly.
It will, and I don't know where the trigger mechanism is going to come from for oil pricing, but I've got an idea I'd like to share with you and the audience that I'm getting some very strong indications, and there's some public information about this, but the Saudis have just struck a deal with the Russians. We can have European sanctions against Russia, but it doesn't stop the Gulf Emirates from proceeding whole hog in developing, say, in Qatar, the LNG gas facilities, pipeline construction. They're doing some pipelines now from Iran to Qatar in the Gulf region. These are things that you wouldn't expect to see normally. But the indication I'm driving at here is that the Saudis have made some agreements with Russia. This is number one and number two in oil production on pricing. Wouldn't it be natural for the two biggest oil producers to control price? I mean, these are silly concepts when you talk in a Wall Street crowd, and they're basic concepts when you talk in a freshman economics class in the university of supply, demand, and price controlled by the biggest producers. At the same time, the Saudis made agreements with the Russians on pricing, by the way, in gold, not the dollar. The Saudis are making deals with the Chinese on payments in the Chinese RMB currency. So Russian pricing and Chinese payments, which was my forecast about 6 or 8 months ago. I also forecasted that Russia would demand payments in euros, rubles, and yuan, and not in dollars from their European clients, and that's exactly what they're doing. So the Saudis are really, I think, running ahead of the game a bit, planning for post-petrodollar days. I think Russia's already climbed aboard the RMB payment system. I call it the locomotive train. But we got some wild cards here, Jason, and even though we got Iran and the Saudis talking nice, making peace, not beating each other up or yelling at the playground. By the way, I think that's on Chinese orders. They told Iran, they told Saudi, make nice, everybody wins. Ignore the U.S. government propaganda. Make nice, everybody wins. But the big wild card that I see regarding the big picture on post-petrodollar days, regarding Saudis and all that, is internal strife. I don't think Abdullah's hand-picked successor will succeed him on the throne. I think it's going to be from a rival family, and I couldn't even give you the name. Besides, I don't think I could pronounce it. The other wild card here is that all the non-Gulf OPEC nations are fracturing. Nigeria is a big oil producer, and I'm not sure, but I think they're almost equal in providing oil, supplying oil to the United States as the Saudis. Nigeria is something like 13%. I think the Saudis are something like 17 or 18%. Mexico and Canada are the biggest for the United States. But I believe the OPEC nations are fracturing. Nigeria just saw something like a 15%, 20% decline in their currency. Their income is way down from the oil sales. Nigeria is a mint nation. Mexico, Indonesia, Nigeria, Turkey. Watch them all fold under the BRICS alliance. And when these alliances start growing and making the news more, you're going to be hearing stories like, well, they're talking about a different method for selling their oil. It's not going to be in the dollar anymore. I think the Saudis are trying to fracture OPEC. I think it's in their strategy. It's in their interest. They just had a meeting where they pretty much ordered the other OPEC nations, Saudi did, to keep the production levels going. I think it's because they've got an agenda to break the U.S. stranglehold. That's what I think.
Yeah, that's interesting. I mean, many of the speculators on the OPEC meeting are trying to say, the Saudis are trying to regain market share like they did in 2009. They're trying to put the shale oil producers out of business. There's just so many factors. We don't know what's really going on behind the scenes, but we do know that they could have normally in the past, when OPEC didn't like the oil price that they were getting, they would cut production, right? It's a cartel. That's normally what cartels do is if they want a higher price, they just agree to cut production. But, I mean, so many people in OPEC cheat anyway, right? They're going to produce anyway. So they're going to agree to production cut, but they would cut production. So it's just really tough to tell what's going on with OPEC right now, except that I think that most of them are getting fed up with the U.S. Like off the record, you can probably hear that. I don't know about on the record if they'll go admit that, in the U.S. media. I don't think they'll say that.
No, and I think what you're seeing is China taking more and more, not control, they're exerting more influence in Saudi policy. I think the Chinese had a hand, along with actually a source of mine, to create this sovereign wealth fund in Saudi Arabia, independent of their central bank. The Chinese like that. The Chinese want the Saudis to push gold. Besides, the Saudis have another motive, and this is not well known, but the Saudis have another motive for spending their treasury bonds and Wall Street bank stocks and bank bonds and buying more gold. They have a big motive, and that's that the Londoners and New Yorkers, London and New York bankers, stole Saudi gold in the Swiss bullion banks. That's what UBS and Credit Suisse, those prosecution stories, that's what they're all about. Let's bring UBS under U.S. control and steal the Saudi gold. Let's bring Credit Suisse under charges. Doesn't matter what charges. Could be jaywalking. Let's bring it under U.S. control through UBS and steal more Saudi gold. So you think the Saudis are really towing the U.S. line? No, I think they're being influenced by China, which tells them, go ahead, increase your production, lower the oil price. Let's break this whole damn thing in dollar basis. Let's break it all. And if we have to fracture Nigeria in the process, who gives a shit? That's what I think.
Now, Jim, you brought up gold there, and the fines that we're seeing now coming to Barclays, and also I think what was it, UBS, or I can't remember which one of the banks got fined. There's just so many fines to so many banks nowadays.
BNP Paribas, the French bank.
Okay, BNP Paribas, and I think there was also a Swiss bank that also got fined for gold market manipulation in the last couple of weeks or something like that. But what's your opinion on the Dutch getting back their physical gold, like about 100 tons, and Germany not getting anywhere near the amount of gold that they've gotten back? Do you think there's something going on behind the scenes in terms of the aircraft, the MH, how most of the citizens of Dutch were on that plane, and that their findings were going to say, that the U.S. was involved with financing the government in the Ukraine to buy the missiles or something to shoot down the plane? Or why do you think the Dutch got their gold back when Germany is a bigger ally and trading partner with the U.S. and had an earlier request and wanted more gold back than the Dutch?
Well, I'm glad you brought up the Malaysian flight as being a factor, and we could be seeing the U.S. sweetening the Dutch coffers to keep them quiet about some things, because I don't want to discuss that. I believe the Germans have angered the U.S., and the U.S. is angry at the Germans, and they're going through a divorce right now that's not well understood because their mad cow, Angela Merkel, is still parroting the U.S. banker political, dogma, policy. She's out of tune. the German companies are trying to get rid of her right now. But there's a whole lot going on. I like to point out 4 transgressions, and it's hard to remember them all on the fly. But the NSA has really angered the Germans because of not just surveillance of Merkel and surveillance of a few individuals, but their whole parliament. They've tapped into the Siemens system for the entire cell network of Germany. Okay, well, that's not really nice. So Germany doesn't like that, and they express their displeasure. Oh, okay, good. I'm taking down notes feverishly. I remembered all 4. The second one is that the Germans don't like these Russian sanctions. I mean, the bankers do. They follow the orders. They'll follow the U.S. right over the cliff into a 1,000-foot ravine. They're stupid. They're suicidal. And that's what's going on. And the industrialists, the commercial, the executives, big corporations, they're saying, well, what are you doing? You're going to wreck our economy. This is no good. We got 3,000, 4,000, 5,000 German companies working in Russia. What are you doing? Okay, so they don't like this sanction against Russia, and they don't like the counter sanctions anymore against food imports into Russia. Okay, the third thing is the Germans are pretty pissed off that their gold requested in 2011 was never repatriated. Okay, this is the crux of your question. But I'd like to change the nature and focus for the question. Why did Germany in 2011 even request repatriation? I'm hearing that there were 2 reasons. One is they were planning for a return to the Deutschmark with a gold backing, and that Americans didn't like that. And the second thing was the Germans were briefed on the expected, the strategic plan for Ukraine in 2 or 2.5 years' time. I'm talking back in 2011. So the Germans wanted quietly to go back to the Deutschmark and have it gold-backed. And at the same time, the United States shared with them their stupid, destructive plan to create scorched earth and a firewall in Ukraine that would jeopardize gas shipments to all of Europe, including Germany. 40% of all German gas comes from Russia. So the Germans said, are you out of your minds in Washington? We want all our gold back. Whatever you've got in the New York Fed, we want it all back. And just to make sure that the Germans understood that the Americans were pissed, the delegation from the German parliament was not even permitted entry into the New York Fed to see their gold. So that's what motivated the German request. It's much farther along in the divorce, hostility at a much higher level. So when it comes to the Dutch, and by the way, this is kind of interesting. The Germans have 3 squires. You could call them partners. I call them squires. The Dutch are kind of more partners to the Germans than squires. So I think the Germans said to the Netherlands leaders, go ahead, see what you can get on your return of your gold. We're all behind you. We'll give you any support you need. Another nation that's a squire, much more squire than partner, is France. Although for years they like to portray the French and German as side by side, it can't be because 90% of French sovereign debt is owned by German banks. That's not a partnership. And the third nation that's squire is Austria. And I'm beginning to question whether it's more partner because I'm learning of a gigantic hoard of Austro-Hungarian Empire gold that was repatriated 20 and 30 years ago. And I'm trying to learn more about that right now. And I've got some feelers out from my own colleagues, what's going on. When it comes to any kind of a statement of gold repatriation, I hearken back to the 2003, 4, 5 years where India supposedly sold a bunch of their gold. And, I'm a little bit confused. I cannot tell you honestly whether it was India buying or selling gold. Let's just say there were some transactions that involved India. And we heard a lot about the Washington Accord that was going to be, made final and strictly enforced, was no more official central bank gold moved around and sold and all this. We heard story after story in 03, 04, 05 about one nation after another selling its gold, and it helped them to knock down the gold price. And in the next year or year and a half or 2 years, we came to learn there was no movement of metal. Those were just book entries in London. They're all leased out gold, and they're kind of fixing their books after some of the improper, illicit usage, now called rehypothecation. I prefer the word theft, pillage, stealing. So London tried to remedy their gold thefts by having India sell some. Well, a nice way to get rid of a ledger item of owing India a bunch of gold is for India to sell the gold. Then London says, well, yeah, okay, well, it's already gone anyway. So I really wonder how much gold ended up being shipped to the Dutch, because when it comes to central banks, it's all paper. I don't buy the story at all. In fact, I believe you might be seeing the Dutch announcing that they got their gold repatriated when they only got a paper ledger item, certificate, receipt, a factura. They didn't get any gold. I think they just got a piece of paper. And they made it sound like they got gold because they want other European nations to demand their gold. They want to start a run on the London gold on the official repatriation channels. That's what I think.
That's interesting. Yeah, I mean the selling there, the talk in public, it's kind of similar to what happened with the London Gold Pool. How they were running ads in the paper about, oh, anyone hoarding any gold was evil. We're selling all this gold to London Gold Pool to keep a low gold price and things like that. I mean, they do it much more covertly now, but it's basically the same type of strategy as the initial London Gold Pool, right? They want to disincentivize the public from buying and holding gold for insurance for when the system does collapse, because I don't think the global economy, especially with a strong dollar, a low oil price, manipulated interest rates, and some of these markets broken, like you said, I don't think the current system has that much longer to go.
I agree, and what I'd like to do is have publicized more, because my voice is pretty small. I'd like to see publicized much more how the Wall Street executives, some of the CIA elite, how some of the banker elite that run the U.S. government, like Rubin, guys like that, I want publicity on their private gold accounts. Because when they raided Fort Knox and sold it into the market, a lot of it went into their accounts. So they're gutting the New York banks that are publicly owned with bonds and stocks, while they put the gold in their private accounts with that gold carry trade. Remember the 0% lease during the Clinton-Rubin administration. I never like saying the Clinton administration. I like saying the Clinton-Rubin administration, because Rubin ran the financial sector. And he ordered the 0% leasing on gold, which forced a gold carry trade. Borrow the gold, dump it on the market, and buy long bond futures contracts. I believe the Wall Street executives made somewhere on the order of $1.5 trillion and $2 trillion on the gold carry trade, and their profits are sitting in Carlyle Group accounts in gold.
Well, Jim, my sources, I know Greg Manorino. He was at New York Stock Exchange and other floor trader there in New York City for a while. He has a lot of contacts still who trade on the exchanges. And, they know that the paper gold price and silver price are being manipulated. What they do is they short the paper price and they buy physical metal with the profit. And, off the record, at those bars in New York City or clubs, the expensive ones where traders go after work, they'll admit that, all the stuff is a sham, the gold market's a sham, but they make so much money shorting the paper markets, they know that the system doesn't have that much longer. They buy physical metal with the profits. That's what I've heard from my sources. They've been doing this since 2011. They knew that the gold and silver price were going up way too fast in 2011, that the prices had to be knocked back down. They knew that the paper price was going to be knocked down a lot. So they just shorted that, but they realized, if you sit down off the record, talk with them, lay out that 5-10 years from now, the current system we have in place is not going to be the same system. They will admit that off the record, although, they have stocks and bonds and other mainstream garbage financial assets to sell. So they're aware that the system is going to collapse. They don't like talking about it. Most of them, though, from what I've heard, a very high percentage of professional Wall Street traders and investors are buying metal. They just will not talk about it unless it's at a cocktail party or something like that with other friends who won't, go and say so-and-so who, in public on interviews says they hate gold or silver is buying gold or silver.
Right. They're running out of vaults to vacate and raid and clean out. The Voice is my big source of information in the gold market. He's an international gold trader with quite an impressive Rolodex of clients that include central banks. He asked me not to give many more details, so I stopped there. But he tells me that they're running out of vaults to clean out. And once they find a new one, it's just a matter of a few weeks before it's all gone. So this game is coming to an end when they run out of physical gold. That's been a point known for a long, long time. And I think we're at the point. With all the raping and pillaging of nations, I'd like to just make a real plain comment. I believe the Cyprus incident had a gold motive. They were stopping the Russians from using the banking window in Cyprus from converting treasury bonds to gold. Okay, we came up with the phony story of confiscations and bail-ins. Have there been any in a year and a half? No. So what was the real story? I think it was to block Russian banking that did all of their window to the west through Cyprus and block them from converting treasuries to gold. All right, what was Libya all about? It certainly wasn't to bring about reform and, more rights and better business practices. Gaddafi, this is very much not known by American population. Gaddafi had a rather smooth-running nation until we disemboweled him and stole his 144 tons of gold. When that went, so did Tunisia, much smaller nation, and that gold ended up being shoved into the system as the elite leaders bolted out with their plane loads of gold. Okay, what's the significance of some of the Saudi actions? Of the Swiss actions with UBS and Credit Suisse? Is to steal Saudi gold. What was the emphasis on BNP Paribas and the prosecution there? I don't pay any attention to what the prosecution was for and the fine was for, the amount of the fine. I care about what was the hidden story. I believe the BRICS nations were using the big French bank BNP Paribas as a station for dumping treasuries and converting to gold to source the BRICS central bank. Okay, that's the Belgian bulge we're talking about, 400 billion sitting in Belgium. The amount of treasury bonds sitting in Belgium was equal almost to the Belgian GNP. Okay, now what's Syria all about? Okay, I mean, it's about a lot of things, but I've got a U.S. military and U.S. government security agency source. I call him Cato. He's a great guy. He's a nut. He's a great guy, though. And he's got a lot of good information. He said, Jim, the MO is to attack Syria, for example, create all the propaganda stories about, they're a bad nation, they got an evil leader, and they're really hurting their people, and they've got bad allies. Well, what it's really about is Syria was going to be a port for Iranian gas lines, and they were heading to Europe as customers. So the MO is to stir up the nation. We're claiming now to bombing ISIS strongholds. Well, I don't think their schools, marketplaces, and residential centers qualify as ISIS strongholds. Granaries, things like that. We're destroying the Syrian economic infrastructure under the guise of attacking ISIS. But the Langley MO, as Cato describes, is to create enough chaos that the bankers feel as though they need to move their gold to safer ground, and when they move it, the Bush boys steal it. So all these different areas, hot spots, they have a gold angle of stealing the gold. It's pretty nasty times, and now we've got the last perhaps place that the U.S. is going to plunder, and that's the Japanese pension funds.
Yeah, actually, I was going to bring that up, transitioning to Japan. What's your opinion of the consequences of what's going on in Japan right now? They're doing hyper-monetization of debt right now, throwing out humongous amounts of yen. I think the yen has dropped, almost 15% in just the last, 3 months or something. The currency markets normally only move, 1%, 2%. That's considered a pretty large move over a month or two in the currency markets, and we've just seen an enormous move in the yen the last couple of months.
Yes, we have. I have this at the tip of my tongue because I took notes on it. The yen was pretty steady. Okay, first of all, I'm not talking dollar yen. The dollar in yen terms is going up because the dollar is going up. But what I'm going to quote here is value of the yen in the futures contracts. So it's the yen value in dollars, in pennies, things like that. Okay, for the longest time, about 6-8 months, the yen was pretty steady at 95 to 98, and now it's 84. So we've got over a 10% decline, something like 12% decline. But 2 years ago, 3 years ago, it was 120. So there's your 30% decline. It's gone way, way down. I have a motto, a little saying. I like to think there are no such things as billion-dollar coincidences. If the amount of money is that big, then things get coordinated. You got handshakes behind the scenes, behind the curtains, behind the smoke-filled rooms, and in the basements. The United States, I should say the Fed. I like calling them the U.S. Fed, and I don't think it makes a big error, but it's just my little foible. I call it the U.S. Fed. They're on U.S. soil. They control the U.S. dollar. The U.S. Fed. They announced an end to QE, no more bond monetization, which elicited strong laughter and thigh-slapping with me because I believe they're a pack of liars. They've lied about everything. I don't even want to recite their lies because everything they do on policy is lie. Everything. They said 0% would be temporary. I said it'd be permanent. It's pretty much permanent. They said that QE would be temporary. I said no, it'd be forever. And it's pretty much not only forever, but to infinity. They're backing up, I think, supporting a lot of derivatives that don't get counted. All right, so the Fed announced victory, like in Vietnam. Let's declare victory and go home. Haul ass! Yeah, I love that. So the Fed announced a success. I can't say it without laughing, Jason. A success in QE, and it wasn't needed anymore. Well, it was a success. Wall Street dumped their bonds, dumped their collateralized debt obligation, dumped their mortgage bonds, and the Fed soaked them up. And I mean, there are a lot of stories that the Chinese are now have the controlling interest of the Fed itself. So, all right, that make them a bag holder? Well, could be. Instead, the Chinese just could be the ones holding Thor's hammer. So the U.S. Fed announced announced an end to QE while the Bank of Japan announced unlimited. Same week. Quite a coincidence. And really not much in the U.S. press about the Japanese action. The Japanese decided that they're going to monetize something on the order of $2 trillion in the next several months. Bearing in mind that Japan is 1/3 of the U.S. population, or so, what kind of news would it be if the United States announced that they were going to do QE for $6 trillion? I think it would cause serious problems. All right, so the U.S. exported QE to Japan. It's a big shell game. I call it Operation Tokyo Twist. If they wanted to have, the follow-on of QE2, which they said would never happen, I said it would. I said it would go up to QE 176. I'm sorry. But I don't think we're going to get that far. I think we're going to get stuck at QE4, which is Operation Tokyo Twist. The U.S. has decided that the Japanese vassal state will forfeit its $1.2 trillion in government pension funds. When I heard that, I thought, well, gee, they're going to have to replace that. So the unlimited QE is to replace the confiscation, commandeering of their pension fund bonds in their own government debt. So the $1.2 trillion is going to have to be replaced. Okay, so now I understand unlimited QE, Bank of Japan. The evidence of this to prove it will be a fast-falling yen. And here you have it. Since the time of their announcement, the yen has fallen close to 10%. It fell over 1% on a single day last week. It's going to cause a gigantic East Asian currency war. The Korean big exporters are not going to say, oh, looks like the Japanese are going to take our business away. China's not going to say the same thing either. The Chinese and the Koreans and maybe Taiwanese are going to say we must react to this. So how do they do it? Well, then you got your competing currency war, race down to the bottom of the frickin' toilet bowl. The Koreans are going to try to bring down their currency. The Chinese are going to bring down their currency. Relative to what? The dollar. Here you go again. The dollar's going to rise more from the East Asian currency war that the U.S. has triggered by forcing the Japanese to do unlimited QE after the United States forced confiscation, commandeering of the $1.2 trillion pension fund. So by going after their pension fund, the U.S. is going to push up the dollar, push down gold, and push down oil. Or should I say paper gold and paper oil. I think we're going to see a sharp break real soon between paper gold and physical gold, and between paper, oil, and physical oil. I'm told by The Voice, this knocked me off my chair just 3 weeks ago. He called me up to tell me, we had some other things to discuss, but he said, Jim, I want you to know, and I want you to put it in your newsletter, that we are sourcing gold for Asian clients, and a lot of it. And the premium paid is a minimum of 25 to 35% off the official price. I said, you mean like $400 and $500? He said, yes. Jim, key word, minimum of 25 to 35%. I didn't say 25 to 35%. I said minimum. And I said, so what's the biggest you've seen paid? And he went on to describe some things that he asked me not to share. But again, key word, minimum. All right. So you're going to see Shanghai slam the paper gold price by locking it in with the physical gold price. They're going to close that gap. And if they did it overnight, you'd be seeing a $1,500, $1,600 official gold price in Shanghai. That would cause a stir, and as I like to say, it would be an FU to London and New York with a direct verbal challenge. If you don't like it, arbitrage it. But you can't, because you don't have any gold. So this is how things are going to break. The Japanese situation, though, I think is going to get critical. They're going to affect their cash flow. If the yen goes down, then not this month's Toyota sales, but maybe next month's or January's Toyota sales are going to be in a lower volume because the price just went down. And if the Koreans and Chinese get involved in this currency war, you're going to see the same thing on Hyundai cars, and it won't just be cars. It's construction equipment. You've got Samsung competing in Korea against Sony in Japan. You've got motorcycles. I actually did an exercise today. I was riding by, not on my motorcycle. I don't have a motorcycle. That's a death trap. I was riding my nice Chinese-made bicycle, Orbea, O-R-B-E-A, beautiful bike. It's 4 years old, gets a lot of miles out of my legs. I rode past a shop that sells, well, you know, domestic appliances like refrigerators, stoves, and whatever, washing machines, and I saw, wow, look at that. They got 15 motorcycles out front. You know, a chain going through all of them to keep them from being stolen. And I went to the salesman and said, I see two brand names there. Rock, R-O-C-K, is one, and the other one, Wu Yang. I said, Wu Yang is clearly Chinese, but what's rock? He said, oh, that's Chinese too. I said, oh, they try to make it sound like it's not Chinese. He said, yeah, whatever. He said to me, hey, senor, they're all Chinese. All the motorcycles are Chinese. Well, that's not quite true because there's still quite a lot of Yamahas, and I actually see a BMW once in a while, motorcycle. They've got a characteristic, very fat tire. Whenever you see the fat tires, not exactly like the Batman one, but the BMWs are still around. We're going to see a big effect in East Asia, the Pacific Rim. It's going to be more than China, Korea, and Japan. It's going to include Hong Kong. It's going to include Taiwan. It'll include Indonesia, Singapore. That whole Pacific Asian Rim, I think, is going to experience some pain and disruption from this coming currency war that's nowhere in the analysis and financial press that I read. Nowhere. All they read about is, well, it looks like there'll be a lot more demand for treasury bonds. Oh, isn't that wonderful? Yeah, but there's a fallout of a falling yen that's going to cause a very big problem, not the least of which will be the Japanese banks. And I'd like to thank a client named Bryant who pointed out to me that the cross-holdings between Japanese banks and Japanese keiretsus, their corporations, huge cross-holdings. In other words, the banks hold stocks of the companies, and the companies hold a lot of accounts in the banks, and maybe even bank bonds in those banks. So the risk is systemic in Japan. With all the cross-holdings, if you have some big banks in Japan go down, they're going to bring down some conglomerate corporations in Japan. I don't have everything figured out by any means, but you cannot have a 10% decline in your currency and see your banks intact, smiling. There's going to be damage. And I believe on the other side of this uniform damage across the Pacific Rim, there's going to be all Eastern Asia climbing aboard the gold standard. So when the United States goes after the Japanese pension fund, they probably didn't expect the unintended consequence of eventually forcing unity across all Eastern Asia for the gold standard.
It's a very interesting theory that might play out. We've seen Japan try to switch, to buying Japanese stocks or foreign stocks. I think most people in Japan realize that what the Japanese central bank is doing with the Japanese government bond market, suppressing the interest rates. They've been doing it even longer than the Fed has, manipulating the interest rates lower. They're closer to endgame than the U.S. is. So I think Japan's going to probably break first, and then, it's going to spread like a disease. This is the Keynesian endgame here. But what do you think then is going to happen to the assets? The Japanese corporations are holding Japanese government bonds. It's all bad collateral then? You're saying it'll all start blowing up at once because it's bad collateral?
Well, I think it's going to hold its value, but internal to Japan, it'll hold its value. But what's going to happen to the yen? So all the damage in Japan is going to come vis-a-vis external entities. In other words, North American Toyota sales, Komatsu sales, Sony sales. It's going to bring in less money. So what they're going to get is essentially a big decline in their import industry revenue stream.
Yeah, I mean their input costs are going through the roof. Their food and energy prices are going higher. So yes, the Keynesian theory, the theory of mercantilism, is that with a cheaper currency we can export more. We'll have more profits with a weaker currency. Blah 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 blah. But every time this has been tried, throughout financial history, you look back at what the Germans tried to do in the Weimar Republic and things like that. The exporters did well for a while with a cheap currency, but then their input costs went through the roof, and it led to currency wars, and other countries started lowering their currencies, and it just ended in disaster. So I don't think, the Keynesians, the people who are running, only look at the short-term benefit, I'll use benefits in quotes, of a cheaper currency, but they don't look at the long-term, problems that this causes.
I think it's going to bring about a huge profit margin squeeze. At the same time, they have a reduction in revenue for the Japanese export industry. The revenue squeeze is going to come because their costs are rising. Remember, Fukushima forced them off, to a large extent, the cheaper nuclear power. So they're complaining about uniformly higher energy costs, while at the same time the Abe administration is forcing in new sales taxes. The Komura fellow, who's their central bank governor, Bank of Japan, he made a moronic statement lately. He said things will all be fine because we're seeing an economic recovery. Not 3 days passed when Japan announced a recession. Okay, so they're already starting to see the recession. It's going to gallop and gallop with huge acceleration as their export trade brings in less money. And furthermore, their foreign subsidiaries, they're going to have to translate back. And I don't have it all figured out, Jason. We got a lot of moving parts here. But the pinch is going to be on profitability, say for Toyota. And the Toyota conglomerate, the Keiretsu, is going to have lower revenue stream. So they might suffer with their bonds. Their stocks are going to go down. And they're going to force a trade war with their Asian neighbors in China and Korea. Those are two large powerhouses. Taiwan is a little bit different because they're like a global IP and intellectual property commander. They've got a lot of plants around the world, and they invent things. I remember I was at Digital in the mid-'80s, Digital Equipment Corporation, DEC, and we had a huge development for a smart terminal. These were back in the days of distributed computing before you had servers. Digital was a large inventor for servers, but they were a bigger player in distributed computing, which was an undermine to the mainframe. So it went from mainframe to distributed to server, and then to PC network together with LANs, whatever. But the Taiwanese engineers, and I had clients in Taiwan, and also Hong Kong, and also Singapore, because I was a quality control consultant. I had my own little process that I implemented with them and saved their plants a lot of money and extra redundant superfluous testing of products on the accelerated testing machines platforms. Anyway, we had a Taiwan engineer who came out with a super smart terminal, and we were talking among ourselves and said, well, is Taiwan going to benefit from that? And they said, well, yeah, but a lot of it's through their intellectual property and patents and things like that. They not only help Digital to do this, they do other things like that. But that's a big source of revenue in Taiwan, intellectual property. So they don't have to build things to benefit from built things. We're going to see enormous problems in East Asia. Japan is trying to have some Gazprom Russian pipelines built. They're trying to have some new LNG ports built from Russian gas. All the while, they're going to get big disruptions because the dollar is dying from its rise. And it's going to cause tremendous problems to the East Asian currencies. And on the other side, I'm going to repeat it, they're all going to be lined up in favor of the gold standard. They're all going to say, we want a role in the Eurasian trade zone where the hip, the belt, is Russia, China. And, maybe the buckle is India.
Now, Jim, for my final question and topic here, I want to talk about the currency swaps. We were talking about this before we started recording. We're starting to see announcements of these bilateral trade agreements, these currency swaps, whether it's China and Russia or China and Canada, which was surprised. I was surprised to see that. I think it was a $30 billion currency swap facility over, the next 3 years. We've seen China start to either do bailouts or currency swap deals with Argentina and Venezuela and so many other, natural resource types of countries and who have, had commodity prices just drop and collapse recently. Do you think this is the groundwork that's being laid with these bilateral trade agreements and currency swaps to expedite the next global financial system?
Yeah, I call them stepping stones. You could think of them as pillboxes if you're in a war mentality. But think of them as maybe pylons to build a bigger structure that's above the water. We didn't think much back in 2005 and 2006 when China and Brazil announced a Chinese yuan swap facility. And for those who aren't familiar, let me just describe it. The Chinese have much bigger banks, so they would put up 3 banks and say to the Brazilian corporations, we want you to do all of your payments and trading and, lines of credit, things like that, more like letters of credit to facilitate trade, short-term credit, not 5-10 years, 2-3 months to get this thing greased. All right, so the Chinese posted 3 banks. Brazil posted 5 banks. That might not be exact. Might have been 3 and 6. I don't know. I don't care. I'm making an argument here. So when the Brazilians purchased products from China, they took the letters of credit and they paid it back with the final sales, or loans within the Brazilian banking system, or extensions with the Brazilian central bank, or whatever. But they made good on them. These are not intended to be loan portfolio centers. They're intended to be short-term letters of credit, greasing, lubrication to the trade process. All right, it got renewed a couple of years ago, 2012. Well, fine, it's gotten bigger. Well, in the meantime, the Chinese built a pier off a major Brazilian port. The pier extends into the ocean 3 miles. That's how big trade is with Brazil. All right, that's one. I was shocked when I learned last week that Los Angeles announced a yuan center. They didn't call it a hub. I got into this before. We don't know if there's going to be yuan-based bonds that say Silicon Valley sells to expand capital investment for their California-based companies. Yuan-based bonds. I don't know. We'll see. I was not surprised when Toronto and Vancouver announced their yuan swap facilities. There are other yuan swap facilities in London and in Frankfurt. The Frankfurt one got my attention the most, and then the second most was London. London wants to remain a big financial center. They're competing now with Hong Kong. Hong Kong already is giant as an RMB hub. They're already giant in selling yuan-based bonds. I'm not talking about just Chinese government bonds. I'm talking about McDonald's and maybe 50 other companies. They're already selling corporate bonds in yuan. Well, you can't exactly do that in Wall Street easily. So they do it in Hong Kong very easily, smoothly, because they've got tradition there. They've got honesty there. They've got momentum there. And Hong Kong officially is part of China, but it's really not China. It's more like another regional chartered territory. I don't want to get into all that. But Paris also has a swap facility. And Luxembourg just opened one. It's going to be used much more for investment purposes because Luxembourg doesn't have much in the way of industry. They have a lot in the way of, say, managed mutual funds and pension funds and banking centers. That heck, I had a pleasurable week, for the most part pleasurable week with Kurt Rickenbacker. He's deceased now, but he told me he had a bank account in Luxembourg. I said, wow, why not Germany? He said, because Luxembourg is a big center for banking. And they got, favorable laws, favorable interest rates, and a lot of professional people. Okay, Luxembourg's big. Now there's a yuan swap facility there that's going to try to attract European investment money for Chinese corporations. The big one, though, is Frankfurt. You mentioned Argentina and Venezuela, and they better be careful not to use these swap facilities as loans. And that's exactly what I think Argentina and Venezuela are going to do, and they're going to get into trouble right away. And I don't know how it's going to turn out. It could be that China will say, all right, Buenos Aires, all right, Caracas, you've abused the yuan swap facility. It's meant for lubricating trade, and you've done it to back up some of your debt and redeem your debt on our account. So we're going to take a stake interest in some of your major corporations. So it could have been a bit of a Trojan horse for the Chinese to get their small, medium, or growing stake in, say, the Venezuelan oil national industry. How about that? There's already a shortage in Venezuela for oil, gasoline, rice, beans, and toilet paper. Why would they have a shortage of rice and beans there? Because that's what their main staple is. Because they export it to try to address their currency problem. That's exactly what's going to come to the United States when they announce their new dollar. We're going to have lots and lots of companies urged to export more to relieve the dollar trade deficit. All right, so I think the Chinese are going to get some instant corporate stakes in Argentina and Venezuela, and it will not surprise me one bit. But in Frankfurt, it's going to be different. In Frankfurt, they're going to try to create kind of a Hong Kong of an RMB hub in Germany that's going to do yuan-based bond sales, issuances, and it's also going to have very big IPOs and secondary stock sales, issuances, for Chinese corporations. And the Chinese are going to do reverse, too. They're going to want some stakes in the German corporation. We're going to see an explosion in German-Chinese trade as a result of the yuan swap facility. At the same time, the Chinese had a motive. They don't trust London. London rehypothecated a lot of their gold. And for those who aren't aware, 1,000 tons of London gold has been shipped out 2 points in Asia, largely in China, since March of 2012, and it has not stopped. 1,000 tons a month. We're talking 30,000 tons. And how do I know that? Well, the voice is one of the brokers. That's how I know. And he gave me a surprise phone call a year ago because I had asked him, because after 4 or 5 months, he said it's 1,000 tons a month. And we're talking the end months of 2012. So by the time February, March, April, and May come around in 2013, I'm saying, sir, tell me, is it still 1,000 tons a month? And I heard nothing, nothing. Then finally in July, and he said it never stopped. And now he says still not stopped. 30,000 tons vacated from London. And I think the Swiss and a little special place in Rome have been supplying a lot of gold to London to make sure that they don't default on all the gold they stole from the old Chinese families. So a lot is going on, and I think the London yuan swap facility center, it's going to become a full-blown RMB hub, but the Chinese have set it up. They did not want to just go with London because it had the tradition. They said, we want to build up Frankfurt. It's already big, but it wasn't big in Chinese terms. They're building up Frankfurt with the yuan swap facility. At the same time, I would not be the least bit surprised if one of the major centers for holding BRICS currency gold will be Germany.
It's very interesting stuff, and there's just so much going on behind the gold market. I mean, we just see the gold price, it's gone low for the last 3 years, but then the physical demand has just exploded, especially now for gold and silver the last couple months here on these extremely low prices, and I don't think this I don't think this can continue indefinitely because the West is just going to run out of metal and or the miners are going to go bankrupt, and then that's it. There's just going to be shortages of metal at some point going forward, assuming that demand out of Asia and other areas who see what's coming, who see what you and me kind of see coming here with the global economy, they're going to continue to add metal as insurance and wealth preservation, not really as an investment.
I agree. I left out one country on the yuan swap facility. Well, two. They go together. Australia and New Zealand are already major centers for yuan swaps. Already. And now they're having enormous new problems with fast rising property values in Auckland, that's the capital of New Zealand, and all across Australia. So you're getting this, it's colonization by China. They're bidding up
Toronto, Vancouver too.
I don't doubt it for a minute. I don't know about the universal element of price increases. I know they're doing a lot of commercial property purchases, but I'd like to bring up, just in a final point, Jason, South Africa. Why were they included in the BRIC group? Originally it was BRIC, and then suddenly it's BRICS. And, now we're hearing about BRICS. I love that. Triple I. Not just India, but Iran and Indonesia, the BRICS. Well, now we're hearing Mint. Okay, well, that includes one of the I in BRICS, Indonesia, in the Mint. But why South Africa? They're a minor nation, except for gold. They don't have a brisk economy, except for the mining sector. And I've got a few South African clients, not a lot. And a few of them have said to me in emails, you get the story wrong. You report, Jim, in your Hat Trick newsletter that the South African mines are no longer profitable. And you got labor strikes and all kinds of individual problems, safety violations, and all kinds of, union action and environmental stuff. And oh my gosh. And you're making it sound like these mines are depleted. They're not. They're just closed. They're not all closed, but some of them are closed. And it's not just from labor problems. I think, and this is where I get into a disagreement with these two particular South African clients. I say to them, I think China's going to come in there and buy them up. And that'll be not only from the start a promised source of BRICS gold sourcing, but the Chinese are going to take, half the output. If they own half the company, they're going to take half the output. Right now, you see the same sort of thing with American farms. Of the hay feed output, hay, a third of it's going to China from U.S. farms because they own the alfalfa farms, or they own portions of them. Anyway,
they bought Smithfield Foods. Yeah, they did the same thing, right? Or they bought one of the food companies too and did the same thing. Pork.
Smithfield
pork
hams and porks and all that. Anyway,
yeah.
So watch South Africa. And the point of disagreement that I have with these clients is they say, you expect them to lower their labor costs and relieve some of the union pressures by bringing in Chinese workers. I don't care what you say about the Costa Rican National Football Stadium, which was 100% built by Chinese labor. I saw them. Orange jumpsuits. I saw them. I talked to one or two of them. I do my usual Sunday bike ride when there's less traffic and I don't have the risk of taxis running me over. They don't give a damn about gringos on a bicycle. They cut me off all the time. So I actually did a hand signal conversation with a Chinese worker in a jumpsuit back 2 years ago. The stadium's been open now a little over 2 years. So they don't think, those South African clients don't think that any Chinese workers would be permitted on their soil. Because the workers, the poor black workers, they're not going to tolerate it. He said, they'll be shot dead. And I said, well, maybe they'll open a mine that you think is still closed, and it'll be 100% Chinese output.
Yeah, it's an interesting theory. I mean, I could talk about the geological problem South Africa has. I mean, they've been mining gold there for well over 120 years. So all that easy gold's gone. I think they do have a lot of gold left, but I think it's a couple miles underground, and the temperature is like 130 degrees to mine it, and there's only like a 4 or 5 foot tall hatch in there to walk in, and there's cave-ins and all kinds of other stuff. So it's not easy gold anymore to mine. So it's really interesting to see what people are trying to do now to get gold. I think you've covered that there's just all the easy gold to pull out of the system and move it to Asia. Almost all of it's gone. The stuff at the back of the vaults is basically that was in the West is gone. I think the Swiss refiners and Hong Kong refiners are running 24/7, 365 to recast that old gold money right into 1 kilogram bars. And I don't think any of this is sustainable for that much longer.
Me neither. We're really seeing a fracture on all potential platforms. And when oil goes, it's going to take down the economies and the banks.
Yeah, I agree. I think the stronger the dollar could potentially get relative to other currencies, and the lower the oil price goes. Those are two things that could absolutely destroy the global economy, along with rising interest rates and or a derivatives market explosion, or if one of the large banks is actually allowed to fail. So those are types of things that could all destroy the global economy, potential black swans. Well, Jim, I want to thank you again for your time. We're at about an hour 20 on recording. I think we've had a great discussion here. Please tell our listeners more about your paid newsletters and what you offer over at the Golden Jackass.
Okay, it's www.goldenjackass.com. That's the website. I'm the editor. I'm the vice president of publishing. Editor and vice president of publishing. It has a lot of free material on the main webpage. Interviews like this. I always demand of the host, it's a pleasant demand and it's a polite demand, but it's always honored, that I get a free link where my followers and my clients can click and listen to a radio interview. And it's a great way to stay current on the alternative news behind the gold and currency world, because mainstream is just so full of propaganda, nonsense, lies, and deceit. There's also some public articles. I used to write one a week for at least 40 weeks a year, but that stopped in around 2010 when I started getting more interviews, and it's great. I love the interviews. I do far more interviews. I do 5 times as many interviews as I do public articles anymore. But what it's intended to do is to help to educate. I don't mean that in a snotty, patronizing way. There are a lot of people who are kind of new to this and think, I know something's wrong. I'm not getting any interest from the bank. And now we've got all this debt being monetized by the Fed. And the banks are being charged with all kinds of fraud and crime. Something's wrong, and just the sense of something wrong, that is the common denominator by some of the newer entries to what's going on in this, what I call global currency war, global money war. It's not a war on terrorism. It's a global war to protect the dollar. And even if that means trashing nations, destroying their economies, even if it means painting nations like Iran as rogues when the U.S. military is flooding their northern border with heroin. There's a lot going on here. But the purpose of the missionary work, the altruistic side of the website, is that I want people to sign up for the Hat Trick Letter. There are 2 publications, reports per month. One is called the Money War Report, and that's about high-level things. We've discussed many high-level things here. And there's a second report called the Gold and Currency Report, which has much more of the ground level. The effect on the economy, some currency war, demand from the mint, policies in India for more import. They just relaxed their policies. A gigantic month recently for gold imports in India. So I try to cover the high level and the low level. And I try to keep to a limit on the reports, which is very hard to do because everything's exploding in the amount of stories and the degree of crisis. So I hope people visit the it's www.goldenjackass.com. Take a look around, enjoy some of the free stuff, sign up for the newsletter, and I guarantee you, if you sign up for the newsletter, you'll be very surprised, if not impressed, with the depth and how things are tied together, the completeness of the analysis. I got a great crack staff. They're unpaid. They're my colleagues. We call ourselves the Brain Trust, the gang, the group. We have a new entry, a London banker. I call him London Paul. We had a different London banker a year ago, and he got a different job, so he's not contributing quite as much, but his name is Euro Raj, an Indian fellow. Brilliant guys. They're all brilliant. And my joke is I've got a very rich inbox for my email, so my research really means should I open up my email? And that's not entirely true because I do a good deal of research on my own and a lot of conversations with people, learning various things. But honestly, I get overwhelmed by what's in my inbox. And the other part of the joke is that these guys on my group, my analytic group of colleagues, they're so good, they're so deep, they're so smart, they're so experienced, and they come from various walks of life that are relevant to this battle we're in. We're warriors. My joke is that I'm hoping that I could be as smart as they are someday. They're really smart guys, so they help me. They're modest. They say, Jim, you make a lot of good points, but here I think is a little more to what's going on. And they say, you don't need to quote me in this. So I make it sound like it's all mine, but sometimes I give attribution. Other times guys say, I don't want attribution. Just put it in your newsletter. Don't miss this point. Because sometimes, this is going to sound strange, if I say something about George in Chicago with the logistics experience, and it's something very sensitive that exposes huge criminality, they might figure out who he is. So they like to be a little bit anonymous. They like me to have the target on my back.
Well, thank you for putting your work out there and, trying to wake people up to at least the stuff that the mainstream media, saying that the economy is good, the U.S. is so much better than everyone else, the U.S. economy is recovering, there's so many jobs being created, blah, 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 there's no inflation, blah, 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 all they repeat this just nonstop, and I guess it's like what Goebbels said, right? If you repeat a lie enough times, eventually people will believe it. So I think you're definitely providing like an alternative opinion there to a lot of the garbage that we get on CNBC and Bloomberg.
It's a hyperinflationary depression that we have in the United States right now.
Yeah, it's using financial repression, and they're trying to keep a controlled amount of inflation, but, the Fed's playing with fire, and they're going to lose control at some point, or we're going to go full totalitarian here. But thanks again for your time, Jim. I appreciate it, and we'll have you on again in a couple months to talk again about all the global politics and the currency swaps and all these things that really interest me.
Okay, my pleasure. Thanks for having me on. Bye now.